Welcome to our show. My name is Allison Neal. I am founder and education consultant for New England Tutors. We serve all of New Hampshire, parts of Maine, and Massachusetts as well. Our goal for this show is to take those challenging questions and situations that our families see every day with their child's education and share some solutions and options for them. Today, we will be helping our viewers take a different look at how to pay for college education. For most families, paying for college today is a daunting event, and the thought keeps many of us up at night. I see families having to make choices and explore alternative options as the price tag goes up year to year. To help us with this topic, my guest today is Joshua Bartlett. Welcome.
Thank you.
Josh is a certified college planning specialist with Accolade Financial. So Josh, tell us how you started in this profession.
Well, I've been in the financial industry for close to a decade now, and many times I have seen families that are very broadsided by the cost of college. The cost of college seems to be the single largest financial hurdle in a family's life these days.
You know, it's interesting. I read in the Huffington Post recently that this year the United States is going to see 3.2 million high school graduates.
That's a lot.
It is a lot. And the other interesting statistic that I read, which puts this all into context, I graduated from, or I applied and entered college in 1981. And the average cost for me was about $8,000 a year. Today, a similar situation, we're looking at upwards of $24,000 a year. So why don't we start the conversation there? Talk to us a little bit about what is the cost of attendance.
Sure. Well, the cost of attendance is primarily made of tuition and fees, room and board, and books. Some colleges also include a couple of $1,000s for personal spending, but primarily anything beyond those is considered personal expenses as opposed to the cost of attendance. Now, the cost of attendance in the U.S. has been rising steadily for nearly 2 decades at an inflation rate of 5% per year for private schools and 8% per year for public schools, which is a lot.
That's a lot. So tell us, how do parents pay for college? How do parents and students pay? What are some of the ways in which they pay for college today?
So all families use a combination of savings, money from their cash flow, and borrowing. Of course, the actual makeup for each family differs based on the family situation. But then when you look at the actual pieces of borrowing and of different forms of financial aid, you see a lot of moving parts there. There are financial aid packages that include grants, which is based on need-based, and that's free money. There are federal loans and private loans. There are scholarships, which it's money for merit-based purposes, so for non-need-based attributes of a student. And those are primarily the available pieces, but then you see a lot of other things happening too. You see families using, unfortunately, retirement accounts, remortgaging houses when maybe they shouldn't, things of that nature. So
tell us a little more about financial aid in that piece, because I think there's a lot of families that really try to tap into that, depending on which school they're going to. So explain that piece a little more to us.
Sure. So financial aid is made up of there's two types of financial aid. There's need-based financial aid, which is the difference between the cost of attendance of a school, as we said, room, board, tuition, fees, and books. The difference between that and the family's expected contribution, or what, based on the formulas, they're expected to be able to contribute per year, that difference is the need at a school. And how each school meets that need varies. There's no rule that says they need to meet all of it, or if they need to meet it in grants or versus loans.
So that's defined by each school. There's no general.
Correct. Yep.
Okay, interesting.
And so there's two parts to that need-based calculation. The two parts being, one, if you can lower that EFC to create a bigger need, and two, the schools that you're looking at, how do they meet that need? Is it mostly in grants or is it mostly in loans? And then the other side is the merit-based financial aid, which has nothing to do with need. Merit-based are for things like athletics, student abilities, and academics, of course, which is by far the largest piece of that.
So talk to me a little bit about how families can minimize the costs of a college education.
Sure. There are a couple primary ways of doing that. First, of course, there's community college, which most people are familiar with. And most of those programs are traditionally a 2-year program, which is great because it's much less expensive. And then also for the students that can get some core colleges, core classes done at the community college price and then transfer to a 4-year degree afterward. However, those transfer students and students that feel like starting immediately in a 4-year program still have to address that cost. So moving forward from there, we'd really be looking at how to match the schools that are going to meet a given student's need and merits in the most efficient manner.
Okay. So I'm assuming then that there are some schools that are better. They have better formulas.
Right.
Yes, than others?
Really, it all depends on the specific student and family.
Okay.
For example, some schools meet virtually all of the need in the form of grant money, however, don't offer merit-based aid. So for maybe a middle to high income earning family, this is not an ideal situation. If the student is a very good student, they would be getting a much better discount at a school with a lot of merit aid available. Now on the reverse side, if the student has a lot of need and they don't have a lot of income and a lot of assets counting against them, then a school that actually focuses more on meeting that need in the form of grants is going to save them a lot more money.
Are there big differences other than the price tag between a private situation and a public school situation when it comes to granting merit-based or financial aid?
There is, and let me show you some examples here.
Okay, great.
Of an actual client that we've worked with. So here are 4 schools that this student was considering. Ithaca College, Rhode Island College, the University of New Hampshire, and Bryant University. So when you look down here at the cost of attendance, that's basically your sticker price, you see Ithaca is nearly $59,000 per year. Rhode Island is about $31,000. In-state at UNH is about $32,000. And Bryant University is about $60,000. So those private schools, being Ithaca and Bryant, much higher price tag. However, they have larger endowments, so they are able to reward those students that match their criteria better. So when you look down this first column under Ithaca a little bit, you see, again, the need is the difference between cost of attendance and their expected family contribution. And Ithaca, on average, these are all based on last reported historical numbers, meets 86% of that need, 71% of which is in the form of grants. So even though the price tag of this school is close to $60,000 per year, this student would probably be paying in the ballpark of $29,000 a year.
Wow, that's a huge discount.
Very big discount. As a matter of fact, when you look over here, in-state UNH, very similar price tag, even though one's the public school and one's the private school. Now, something worth noting is when you look at Rhode Island College here, they look like a clear winner at $22,000 per year. It looks like the least expensive option for this student. However, you want to consider down here, see this column, the 4-year graduation rate.
Okay.
So the 4-year graduation rate is only 14% at that school.
Wow.
So when you are considering this cost of attendance and the actual annual cost of about $22,000 per year, you'd want to multiply that by 5 or maybe 6 times, meaning that for this student, that might be the most expensive option. And a little side note on the graduation rate, the published on-time graduation rate, that term on time, actually refers to the national average rounded. So when you see in publications that a school graduates 95% of their students on time, that means the national average rounded. Well, the national average is 6.2 years. So when they say on time,
degree.
Exactly. So that means 95% of our students have graduated in 6 years from our 4-year degree. So that's very misleading. It's much more important to understand what the 4-year graduation rate is versus
well, the financial impact of that.
Oh, absolutely. And not just
crazy.
And also it's not just the extra cost of those years, but those years you're also not working, so that's lost income.
Right.
And then at the bottom of this addresses, so that part all really addressed, the top half of this addresses the need-based. Down here we're looking at merit-based. So again, looking at Ithaca's column, you see that 20% of their students receive merit-based need. That means has nothing to do with need, but based on student attributes.
Right.
The average amount is over $13,000 per year. So for this student, who is actually very well qualified to receive merit aid at this school, this is most likely going to be the least expensive option, even though in the beginning it looked like one of the most expensive.
Right.
And let me just point one other thing out here. When you compare these two schools, Ithaca and Bryant, for this student, because this student had a lot of need, look at what the actual amount per year they would have spent at Bryant versus Ithaca, even though they're about the same cost of attendance. So this is very important for a student and their family to understand, because that $18,000 a year difference, we're talking about a $72,000 a year mistake if they had just applied to one and not the other.
Right, right, interesting. And these figures are, when we talk about student merit-based, similar when you talk about athletics and athletic scholarships, or is that a whole other?
Yes, well, these numbers I'm looking at are non-athletic scholarships.
Okay.
When it comes to athletic scholarships, there's a little bit of misconception there. Every student athlete's parents think that they're going to, be on a full ride in school with their sports. Right? They hope. But the reality is less than 2% of high school athletes actually receive any scholarship money in college for athletics. And of those, the average amount is $10,000 per year.
So there's really no such thing as a full ride?
No.
Does that even exist?
They do have, there are situations where tuition will be paid for in full, or covered in full. But there are still, there's still the room and board, there's still your books. Right, exactly.
Those other costs.
And if you want to do a little bit of an example for a student athlete at, say, a private school that's, the average is about $50,000 a year now for private schools, cost of attendance. Assuming they get the average and they were lucky enough to be in that 2% and receive $10,000 per year, even if their parents are then able to help with additional money and say they get a little bit of, a little bit of merit aid for academics, even if they cut that price in half with the athletic scholarship to $25,000 per year, we're talking $25,000 per year in loans, times 4 years if they manage to graduate in 4 years. That's $100,000 of student debt just in 4 years.
And what's the average
So if you use an interest rate of conservatively 6% is about the average right now for student loans. If you were to multiply that over a 20-year repayment plan, the monthly payment for the next 20 years is about $716 per month. Now the average 4-year degree graduate only earns about $45,000 per year. And when you net out taxes, you're actually looking at that student loan payment being more than 25% of your take-home pay. This is really scary for the future of our economy.
Well, I think that's already hitting now.
Yes,
I mean, we see
absolutely.
this in the news often, defaulting on student loans, and it's becoming a big issue, big issue. So great information, great information. You know, we were talking the other day, and you told me there are currently 3,026 four-year degree schools in the United States today.
Right.
That's a huge number. To me, that's a huge number. How in the world do families narrow that and understand what school is the best fit for my student?
Sure. So typically when you're talking about a best fit school, you're talking about best fit academically, best fit personally. Of course, the student wants to be, has preferences as to being in a city or being, urban or rural,
Sure.
Size of the school, things like that. And then also is the financial fit. And that's a big piece that you see missing a lot in the school selection process. But having a system in place to be able to sift through all of those schools is very important, because a lot of students are only familiar with the 30 or 40 schools that are local enough and have the marketing budget to send them brochures.
And I often see, as I work with these students on our end, that their school's guidance office, whether they're attending a private high school or a public high school, often don't have the resources or the time to really help the students navigate all the twists and turns of picking the right school.
Well, it's time consuming. And God bless them, the guidance departments they have a lot on their plate and a lot of students for each of them. They do a great job in many cases helping with that academic and personal match, but they're not, in the financial world, they don't have the ability to look at a student's given scenario and then identify which schools will actually give the biggest discount to that student.
Right. Well, thank you so much. This has been some great information. I've certainly learned a lot today, and I hope all of you out there who are watching has learned something. If you want to view this show again, we will be posting this both on Joshua's website as well as my website, and you can see the information at the bottom of the screen on how to get a hold of us that way. Our next show, we will be welcoming Ann Helmus. She has a PhD in pediatric neuropsychology. She also heads up a business here in town called Nesca. What we're going to be tackling in that show is neuropsych exams. Why would you order one for your child? What do they show? And many questions surrounding what that process is. So thank you so much for joining us. I hope you join us next time.